Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because for the first time ever, Bitcoin's 200-week moving average is now above $50,000. And those of you that have been around for a while should know the significance of the 200-week moving average for Bitcoin. It's where Bitcoin tends to bottom during its bear markets like 2022, as well as the March 2020 crash, the 2018 bear market, and the bear market that ended in 2015. And now I know there's a lot of people out there saying Bitcoin isn't going to have large corrections or bear markets anymore because there's ETFs now, and now we have institutional involvement. But if that were true, then why does the S&P 500 have bear markets, and why does the S&P 500 revisit its 200-week moving average every few years, even though it's had ETFs for decades and is possibly the most institutionalized asset? So I will continue to operate under the assumption that Bitcoin will revisit the 200-week moving average eventually. It will have a future bear market and it will still have large corrections, because you cannot have a 700% rally in an asset without seeing some decent downside as well as investors lock in profits. So because I know Bitcoin will eventually revisit its 200-week moving average, I like to look at its extension from that moving average to see whether it's cheap, fair value, or expensive at its current price. Now, I want to be very clear in that I still don't think the top is in yet for Bitcoin. I still believe we have higher to go. As of right now, we are seeing quite greedy sentiment, but we haven't seen the extreme greed that we tend to see at major local tops and cycle tops, like the local tops that we saw in November of 2024 and March of 2024. If we look at the Bitcoin realized cap to try and gauge the profit taking that's been happening recently, we have not seen anywhere near the profit taking we saw in November of 2024 or March of 2024 yet. So investors are still waiting for higher prices before aggressively locking in profits. And if we take a look at the MVRV extreme deviation pricing bands, one of the coolest on-chain indicators out there, we can see that Bitcoin still has not reached the red zone that it has topped out at in November of last year and March of last year, and is right between the orange and red regions. And funny enough, that is almost exactly where Bitcoin is on our Bitcoin value chart. So it's really cool to see that two completely different methods of valuing Bitcoin, one looking at the market cap and realized cap, and one looking at its extension from its 200-week moving average, have come to the exact same conclusion that Bitcoin is a bit expensive here, but isn't very expensive quite yet. So what am I doing at this point in time if I think Bitcoin is a bit expensive here, but I don't think we've topped yet? I did take profits across all three of my holdings this week, not because I think we're going to go down from here and not because I think the top is in, but because I prefer to take my profits slow and steady instead of trying to time things perfectly and try to sell everything at once and just hope that I can buy it all back lower. I have found a slow and steady approach to be a lot more easy to navigate. And as always, if you'd like to learn about my portfolio automation system or mental models I use to navigate this market, today is the last day of early bird pricing phase 2 for the Crypto Enjoyers program before the price goes up tomorrow. And if you'd like to see the first part of my portfolio system modules or a very useful mental model on how I approach decision making in markets, you can check that out in the video description. But as of right now, everything does seem to be going according to plan, and I do think Bitcoin will continue following this early cycle scenario. I don't know if we can keep this rally going until Q4. A lot of that is going to rely very heavily on how things go in August and September, because historically those have been very difficult months for Bitcoin. Now, August is a bit of a coin flip because it's been very good for Bitcoin in post-halving years like 2021, 2017, and 2013, but just about every other year for Bitcoin has been terrible in August, and September is just a pretty bad month for markets overall, so we'll have to monitor that price action and see what kind of clues that can give us as to what comes next for Bitcoin. As of right now, we can see some very clear profit taking with that big wick to the upside, but we're going to have to wait for tomorrow's close to see where Bitcoin settles. We're still not seeing any clear signs of a cycle top on CryptoQuant's Bitcoin peak signal. Even though that signal has been getting weaker cycle after cycle, we haven't even seen any orange on this quite yet. And although a lot of us crypto natives are starting to get excited because of the announcements and the price action, it doesn't seem like retail FOMO is back quite yet, especially if we take a look at Google searches for the term Bitcoin. We can see there has been an uptick recently, and it seems to be breaking breaking out of this downtrend that it's been in, but we're still nowhere near the local top that we had in November of 2024 and still nowhere near the March 2024 top either. So we'll see what happens. We are seeing a bit of selling coming in on this week's weekly candle, perhaps because many investors are rotating to things like Ethereum and other altcoins. But as long as we maintain this trading range breakout, I'm not seeing any huge warning signs quite yet. And this is exactly why the free weekly report that comes out every Monday was called Price Discovery, is because when Bitcoin is in price discovery, we don't really have any good support or resistance levels to strategize based off of. So we have to rely on things like on-chain analysis and sentiment to try and gauge where the market is. But the good news is we're still seeing very impressive ETF inflows, and Bitcoin is still extending its 12-day inflow streak, which brought in $6.6 billion. You can see that very clearly here. I mean, it would have been a much longer streak if we didn't have that singular outflow day, but we're seeing a lot of capital still coming into these ETFs and still supporting the price. Same thing from the corporate treasury trend. We now have Bitcoin corporate treasuries holding 847,000 Bitcoin worth 91 billion. And there's 125 public companies holding Bitcoin, which is pretty crazy. And this seems to be a trend that is accelerating and not slowing down. So we'll keep a close eye on it going forward. And it looks like Charles Schwab is tired of watching BlackRock and Fidelity have all the fun bringing in these Bitcoin profits. So they announced they're going to be launching Bitcoin and Ethereum spot trading in the very near future, which is just going to give more people access to these assets. We said a close above 2,800 would be a huge range reclaim and would likely send us to 3,400. Now that we're closing above 3,400, I wouldn't be surprised if we see $4,000 Ethereum very soon. And as always, there will be chop along the way, there will be shakeouts, but a 47% rally from the second largest asset in this asset class is always a great time. This has very clearly been an aggressive short squeeze, as sentiment on Ethereum was so bad, and I'm sure there were so many people longing Bitcoin and hedging that by shorting Ethereum. And if we take a look at Ethereum on the 3-week chart and look at its RSI, we can see that it hit a low that it only hits during bear markets and seems to have hit a major double bottom during all of that tariff drama, and it seems to be headed quite a bit higher from here. The RSI signature actually looks very similar to what we saw in the previous cycle, where it bottomed in the bear market in 2018 and then double bottomed once again in 2019. This time around, Ethereum bottomed back in 2022 and seems to have double bottomed on that trend line in April of this year. And of course, once the rallies start happening and the excitement starts to set back in, we start to see these fractals once again. Now, I do think $5,000 Ethereum is reasonable compared to some of the other price targets we're seeing, especially if Bitcoin can hold on for a couple more weeks or months and give Ethereum room to rally. But I'm not sure about all of these people calling for $10,000 Ethereum all of a sudden, or consensus calling for roughly $16,000 Ethereum, or this trader calling for $30,000 Ethereum. It does seem like everybody is getting a bit ahead of themselves, and although I would love to see those price targets, I'm going to keep my expectations a little bit lower so I don't get caught up in all of the hype. Because we have seen a huge uptick in open interest for Ethereum recently, significantly higher than the last time it was at 4,000. So a lot of people are betting on upside here for Ethereum via futures, and maybe they're just front running what's happening with ETFs and all of that. But this is definitely a concerning sign in terms of just quick volatility and leverage washouts that can happen to shake out this leverage on the way up. But Ethereum Bitcoin did hit our target at the 50-week moving average, where it did run into resistance previously, and it has not been able to get above that level since about March of 2023. So perhaps we're going to see some consolidation here, and the real test is going to be whether or not we can break above it. The good news is that we definitely have the on-chain data and narratives to do so. We can see Ethereum ecosystem transactions absolutely skyrocketing here recently. We know that NASDAQ filed an application to add staking for BlackRock's Ethereum ETF, which is likely going to happen by the end of this year. We're seeing investors pouring in tons of money into these Ethereum ETFs. We even saw over 700 million in one day. And that single day inflow is almost double our previous record that we saw for Ethereum last year when it was at 4,000. So perhaps this is a sign of euphoria here and could mean that we need to consolidate. but still bullish for Ethereum's future. We know that a lot of investors are excited about stablecoins with the new regulatory clarity and the expansion of RWAs. We also have the Bank of America CEO saying they're exploring stablecoins to move trillions in client transactions, and Ethereum is also getting its own treasury companies, with Sharplink Gaming saying they're going to do a $6 billion share offering to buy more Ethereum. And it's no surprise that with Ethereum taking this much in inflows and this much attention that Solana is lagging behind a bit. Now it is closing above its range mid, which is great because we then would target the range high at 200. The Solana Bitcoin pair does not look too bad either. It's trying to get above its 20-week moving average for the first time since January of this year, but Ethereum is definitely taking a lot of the spotlight right now. And there do seem to be quite a few things pointing to at least a mini alt season here. We have Total 3, which is the entire market cap minus Bitcoin and Ethereum, getting ready to break out of what looks like a cup and handle formation. We have Total 3 divided by Bitcoin breaking out of a downtrend that it's been below since our last mini alt season in December of last year. We have Bitcoin dominance having its largest drop in a very long time, mainly driven by the rally we've seen in Ethereum since it is the largest market cap. And we're seeing the highest reading on the alt season index since about February of this year, and the first time we've broken above it since November of 2024, right before we had that mini alt season for a month or two. So a lot of things are pointing to a mini alt season here over the next few weeks. We just need Bitcoin to stabilize or keep going higher slowly to not pull the rug out from under them before they can start rallying. But it's great to see Solana and Ethereum back above break even over the past year, and it's only a matter of time before they catch up to Bitcoin, in my opinion, as long as these conditions remain. And speaking of conditions remaining, global liquidity says that Bitcoin should have another month or two of upside before eventually rolling over, based on the downtrend we're seeing begin to form right now, based on the fact that the US dollar index is seeing a bounce finally. And it's probably bouncing because rate cuts keep getting pushed back, because we're watching inflation remain stubborn while the labor market remains resilient and while GDP remains positive. So there isn't really any huge recession signs quite yet. And it's hard to justify rate cuts when assets like the S&P 500 and Bitcoin are in price discovery. So we'll see what happens. But as we look forward, the federal government is still running huge deficits. That trend seems to be worsening year after year, especially with the bill that was passed recently. Exponential debt growth results in exponential money supply growth and devaluation of the currency, which is a strong tailwind for risk assets that we price in fiat currency like the S&P 500 or fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.